So let's see that some of the questions that we put in the email was, well, let me just ask you guys, and I'll start with Ben. I bet, like, what would you say is the main question you're hearing from our members right now?
By far and away, the main question I'm hearing is, with this whole COVID-19 thing, should I sit on the sidelines and hang out for a couple months and just wait and see what happens, or should I move forward because I have this money and I was planning on closing on a house in March or April? What should I do? And that's, I would say, probably 8 out of 10 strategy sessions or conversations I have with people, that comes up in one way, shape, or form in every call. So
sure. So how do you answer it? And let me give the disclaimer. Right now, we are going to be giving our personal opinions, and therefore do not rely on it for your own investment strategy. Just speak to your own advisors. Take what you like from what you hear from us, but again, don't rely on it as a legal opinion or an accounting position or anything like that. We're just giving our opinion. Of course, I have to say that. All right, Ben, go for it. What's your opinion?
What I generally say is my spidey sense tells me that, yeah, there might be a small correction in some of the markets, but it's going to be, I think, this is purely speculative. I think in the realm in which RealWealth dwells, which is like the 80,000 to 200,000 realm for rehab properties, and the 150 to 290 for new construction. I don't really think we're going to see that much of a correction. We might in some markets, but if so, it's going to be relatively modest. So that's just my sense. But I also say, if you want to hang out for a couple months and wait and see what happens, by all means do so. I mean, it's the opportunities are still going to be there in 2 months that are there now. They might just be a little bit different. So it really comes down to your personal comfort factor. Some people who, generally the people who have owned real estate for a while, see real estate as a long-term play. They plan on owning it for 10, 15, 20 years, and they see this as but a blip in the radar, that it might be a pretty big blip, but it's in the long term not going to affect things so much that they would not purchase right now because of it. So I don't ever advise or make the decision for anybody, but I just tell them my opinion, and then they make the decision based on how nervous they are, frankly.
Sure, and with good reason. It's been a very uncertain time.
Yeah,
Leah,
I agree too. A lot of it depends on who the investor is. Like if it's a newbie investor and this is the first investment, I mean, buying a house 3,000 miles away is kind of scary, even under normal circumstances.
Yeah.
So for a first timer, and you can't fly out there to see the property, see the neighborhood, if it's not worth losing sleep over. So if you want to sit on the sidelines for a couple months and wait it out, that's fine. But more seasoned investors, like I've been investing since 2004. So I've seen the last global financial crisis in 2008. So this is just par for the course for me, but it's all up to the investor as well.
Yeah.
Well, Joe, how would you compare this? If you've been through that last downturn, how do you compare this one? Or do you?
This one seems to have a lot more uncertainty, because last time we knew what caused it, it was just excesses in the banking system, and it's correctable. Whereas this one here seems more of a wild card, like you don't really know how long it's going to take to find a vaccine or how much things are going to get out of hand. So there seems to be more uncertainty this time.
Yeah. Okay. And Leah, you sent an article this morning from, I think, the Wall Street Journal.
Yeah.
And it was interesting. What did you learn from that?
Yeah, well, the article was just talking about, and it was something that I hadn't really sat down and thought about. I thought about the fact that demand for housing has obviously changed. But the article was making the point that, hey, supply changed just as much, if not maybe even more. So we kind of, moved both, metrics down, and yet what still remains is that housing shortage that didn't go away. And Joe pointed out a great point too, that we also have, record low interest rates that might even be boosting demand a little bit more so potentially. And one of the great points of the article, I thought, and it's something I've kind of been talking about on my own for a while, is that Zillow predicted this week, or they're predicting that property values are going to go down between 2 and 3% by the end of the year, but that they will recover in 2021. And to Ben's point earlier about the price points that we're looking at, 2 to 3% is about what most of these properties cash flow in a year anyway. So, you got to think about the opportunity cost too. I mean, I totally echo Joe of, hey, if you're not comfortable, wait, by all means, there's no reason to rush into this. No one's twisting your arm to invest. But as far as for people who are like looking for blood in the streets to go out and get these great deals, and I want to wait until people, are feeling it and then come in and get a great deal, I'm personally not convinced that you're going to see much of that in this really stable price point that we focus on.
Well, I think you make a really great point. Zillow says properties will go down 2 to 3%. What properties and where and which ones? And there's all these different asset classes and markets. I mean, how can you possibly make a statement like that?
Right.
So there may be markets that go up in value, and in one market, let's say Tampa, maybe the higher end goes down in value, but the lower end goes up. So
Right.
to make a blanket statement like that is just kind of funny, really. But I guess what they're saying is overall, or I don't know. So
It's not
Aristotle,
helpful.
thoughts on that and
Right.
what you
There's so much nuance too. Like, you think about, I mean, we focus on markets that are already stable. They're already, they're affordable. The average person can afford the average home. They have diversified economies. But even then, we're buying, I think, the most stable price point in that already stable market. And so, if you're comparing it to somebody who goes to an unstable market and they buy a very, high price point, of course, that's got extreme, risk. So that spectrum is just so wide. It's important to kind of bring it into context and look at, the true properties that we're looking at.
Yeah. So Aristotle, what are some of the questions? I mean, do you have a response to that, or what are some of the questions that you're hearing from investors?
I'm hearing similar things that the other investment counselors are talking about. The biggest one that I really hear the most is, oh, I'm waiting because I'm hoping values are going to go down or prices are going to go down. And to echo what Leah was saying, yeah, supply and demand has dropped at the same time, in most markets, and so that doesn't necessarily mean prices are going to come down. I think that, well, let me back up. So I follow a lot of local real estate. I'm in Orange County, so I follow a lot of real estate here, and I'm on a bunch of news lists and newsletters I get and everything. And the higher price point homes, like the 1.5 and above, those are probably going to take a little bit of a hit. But your sweet spot where I'm at, which is like anywhere from like 550 to like 800,000, that's like still in very high demand. There's just not enough supply, and as we keep going forward, prices are still going to nudge up in those price points. But in the prices that we're selling in the 80,000 to 2 or 300,000 range or so, I can't imagine those going up or down much at all, because there's nothing really there. There's no wave of foreclosures that people are defaulting on yet. I mean, that would be another topic to talk about, but that's the biggest question I'm hearing. And then the biggest thing I've been talking about is, who's going to be your renter, right? So if you buy a property, are you going to be able to find a renter? And the question is, you can, but the stability of that renter, they might work in retail, and obviously that's all confused and shut down a lot for the most part. Although they are opening things up slowly, they say. But then like Joe said, it's very uncertain. Everything what's happening right now, it changes every day. And so, again, in Orange County here, they opened up Newport Beach and Huntington Beach for the weekend, and crowds of 10 to 1,000 people came, and then it was too much, and they shut it down. And now what everyone's doing is they're protesting. So everything's changing every day. Yeah, it's crazy. It is crazy. But I guess to sum it up, yeah, like everyone said, I mean, if you don't feel comfortable investing, obviously don't do it yet. But I would say don't avoid investing because you think prices are going to go down a lot. Again, an $80,000 property in Birmingham is not going to go down to $50,000. I mean, it's just not going to happen, in my opinion. And so don't wait for that. Don't wait for that kind of deal, because you might not see it. But on the contrary, yeah, don't rush into things. But I guess the other thing you have to think about is, where else are you going to put your money? If you have a bunch of money that you want to invest, the stock market's actually doing pretty well, Kath, and you could probably talk about that too, or you've already talked about that in your past webinars.
I won't touch it. I won't touch that conversation. I have no idea what's going on there.
But it's really interesting how it's still there, and it hasn't dropped like 5,000 points necessarily. So it's crazy. But like, where are you going to put your money, I guess, is a question. I still think rental properties in general are always going to be the best place to put your money.
Yeah.
Here's my thoughts on it, because I started in besides how I got into our first house, how I got into investing was through the mortgage side of it. I was a mortgage broker. That's the details of that are in the book, but I learned very quickly that it's really about liquidity, because most people don't have a bunch of cash to buy a bunch of houses. I mean, it depends very much on borrowing and your ability to borrow. Right now, the borrowing ability, where the liquidity seems to be, is with conventional loans, which are the lower, under, it depends on where you are, but again, in California, it'd be under 750 or something like that, and other areas less. But that's area where there's still money moving, and therefore people can go to the bank, borrow money, and they're multiple offering on different properties. I mean, at RealWealth, we had a big March. It was a really big March. We had like almost record number of sales. It was interesting. And for those of you wondering, how we work, RealWealth Realty is a brokerage. Unfortunately, we are licensed in California, but we don't really like doing business in California. We like these other markets that are more landlord friendly, where the numbers work better, where the prices are still low and they're affordable and they cash flow. So we do a broker to broker relationship. That is how we make our money, just like other real estate companies where they refer to someone else and they get a broker to broker fee. So that's how that works. And that's why our investment counselors can meet with you and counsel you with a free, session to help you plan your strategy, because we have a profit sharing situation here at RealWealth. But coming back to the idea of liquidity, there's still money flowing in, I guess, the lower end, if you would say, but it's very restricted in anything else, in the higher end, in commercial. So when people talk about real estate, it's just too broad. You cannot say real estate's going to do well or not do well. I mean, that's like saying you've got retail in there, you've got apartments in there, you've got warehouse, single family. I mean, real estate is too large a term. Just like saying stocks, there's so many different kinds of stocks. Some will do well and some won't. That's why people invest in like the S&P, where there's different kinds of stocks in there. But it's the same with real estate. They're all going to perform differently. But when you see less liquidity for potentially commercial, that may be where there's more pain in the future, and we will be paying attention to that. That's just my opinion. Anybody's thoughts on that?
No, I agree. You can't be too broad about the real estate market. And yeah, the commercial, especially with all the retail stuff going on, I'm glad I don't own a bunch of Walgreens, for example, or just, just office rental buildings would make me really nervous. So I'm glad I'm in residential. But yeah, I mean, I just think back to your original question, is this the right time to invest? I still think it kind of is, but it just depends on your perspective. Bottom line, if you're nervous, like Joe said, it's not worth losing any sleep over.
Yep. All right. So one of the questions we put in the webinar, and then we'll get to your questions. Are there markets on RealWealth website? We have 15 markets that we have data on, and where we have these property managers and these teams that find the properties and renovate them and get them rented for our members who don't live in those markets. Are there, again, this is opinion. We're just going to do opinion only, and everybody has their reasons for liking what they like. Let's start with Ben. Is there a market that you like more today, or that you think is more resilient?
Well, I live about 30 miles south of St. Pete and 50 miles south of Tampa, and I just really like that market. I like our team there. I like what they're doing, some of the things they've got coming down the pike. And when I just see all the cranes in the air and the activity happening, it's like, you go to downtown Denver and there's cranes everywhere, but it's just way too expensive in most cases to invest there, because Denver's seen like 40% appreciation or whatever. But here it's affordable, and yet there's still a lot going on. And of course, our team isn't investing too much in Tampa. They do some in St. Pete, but most of their buy box, as they call it, is about 45 minutes north. But I feel really good about that market. They don't think they're going to see much of a slowdown, if at all. So I really like that. And I'm actually under contract for a quad in Jacksonville. And it's actually in Ocala. but that doesn't have anything to do with today's market because I put that under contract almost 2 years ago, as Leah knows. So,
Construction can have its delays.
yes, new construction has its falls and delays are one of them, but you just have to roll with the punches. So I really like Florida. I think it's going to continue to roll along. There are those who are just paranoid about global warming, a justifiable concern, but I don't really see, as long as I don't buy in a flood zone, I'm not too worried about that. And then interestingly enough, when I did the webinar with Cleveland, which I would think would be kind of hard hit, or at least one of the ones that would be a little bit more angst ridden, and was like, no, I don't really see any price pullback at all. I feel really good about the market and the direction it's going in, especially because she knows what specific zip codes and what specific neighborhoods to invest in. The healthcare corridor with all the Cleveland Clinic stuff, and then some of the hipster up and coming neighborhoods like in Cleveland City. I mean, all of our affiliates, all of our property teams do that, but that one stands out in my mind. She's like, nope, I don't think we're going to have a pullback at all.
I've had the same experience when we did the webinars with Detroit. I was like waiting for the shoe to drop, like, oh yeah, boy, they're struggling and suffering, right. And it was not the case. So right. It's been really across the board and very, very interesting.